Hi everyone. In this video, I'm going to do a financial statement analysis of Amazon's most recent financial statement. Now, I'm going to look at the balance sheet, the cash flow, and the income statement, not necessarily in that order, and we're going to see some interesting things about Amazon that can partly explain why the stock is down so much off its highs. So let's get right into it. What I have here to begin with is the statement of cash flows for the year ending in December 31, 2020, 2021, and 2022. So we have 3 years of data here. And looking at the most recent year, we see that cash flow from operations was $46.75 billion. That barely increased from 46.3 billion in cash flow from operations the year prior, and that was significantly below the 66 billion in cash flow from operations in the year 2020. So you can start to understand why investors were beginning to get disenchanted with Amazon stock. It's supposed to be a growth company. It's certainly valued like a growth stock, right? It's an expensive valuation, and typically companies with expensive valuations are valued that way because investors are expecting robust growth in the future. But in terms of cash flow from operations, we're not seeing that from Amazon. And what can partly explain that is look at this investment in property and equipment here. Purchases of property and equipment from 2020 to 2022, 40 billion in 2020, 61 billion in 2021, and 63.6 billion in 2022. Over these 3 years, Amazon has spent over 164 billion on property and equipment. These are things like warehouses, airplanes, vans, machinery, robotics for its warehouses, fulfillment capacity, all of that. A whopping $144 billion. That's a lot of money for a company to invest, and especially because the logistics network, the that side of the business is not where the company is generating most of its profits, unfortunately. It's the AWS, the Amazon Web Services. Now, of course, some of these investments are also for computers and servers and things like that that support AWS, but the bulk of these investments are for its fulfillment business, its e-commerce business, the business that's not consistently profitable. In fact, it's generated losses over the last couple of years. So I can understand why investors, including myself, have become disenchanted with Amazon stock over these last 2 years or so. We have the income statement here, and again, 3 years of data, 2020, 21, 22, and sales have been absolutely exploding for Amazon, growing from 386 billion to 469 billion to 513 billion for the year. That's an absolute incredible amount of sales that is only matched by Amazon's massive spending. Look down here, it's total operating expenses, 363 billion in 2020, 444 billion in 2021, 501 billion dollars in 2022. That's how much money Amazon spent. 501 billion dollars. That's incredible. That's astounding that the company spent that much money and it only earned sales of 513 billion. So it's barely getting any more sales than what it's spending. So it's hardly generating an operating profit. And in fact, if you look at operating income over the last 3 years, it more than halved in 2022 from 24 billion down to 12.2 billion. So its operating income actually fell by more than half, even though sales actually increased by $44 billion. So it's got an expense problem. It really needs to get these costs under control. Now, it did announce a layoff round of 18,000 people. And when I saw that announcement, I was underwhelmed. The company has nearly 1.6 million employees and spending over $500 billion, and it announces 18,000 job cuts. Now, is that going to make a dent into its massive cost base? Hardly. And I think more needs to be done for this company to get its costs under control. Finally, let's look at Amazon's balance sheet, and looking at its cash balance. Its cash increased from 36 billion in 2021 to 53.9 billion in 2022. Overall total assets decreased from 161 billion to 146 billion. Total current assets, I should say. However, total assets, including long-term assets, increased from 420 billion to 462.7 billion. So a nearly 10% increase in its total assets, mainly going to property and equipment, as we saw, growing from 160 billion to 186 billion. And that makes its income, it's more than having of operating income, look even worse, because it's you added all of these assets to your business and you actually decreased your operating income. Typically, when a company adds assets, it generates profits off of those new assets, a return on that investment, a return on assets. But and investors didn't see that work with Amazon here. Now, of course, that's partly the macroeconomic factors are partly to blame. Consumer spending habits have shifted from spending money online to spending on away from home experiences. That is partly to blame. That shouldn't be understated here. However, what's in my opinion equally to blame is Amazon's overinvestment in capacity, overinvestment in fulfillment during the earlier stages of the pandemic, when they experienced an absolute boom in customer orders and new customers. They just invested in so much capacity because they wanted to maintain that excellent customer experience, fast and free delivery, millions of items available, no limited out of stock and limited sold out showcases. But that's coming at the expense of profitability, and it's tremendously hurting profitability and cash flow. And so investors, all customers might have been pleased with Amazon, right? Customers were pleased with Amazon, but investors have not been pleased with these decisions from Amazon management. And now you get that kind of full picture, looking at Amazon's financial statement analysis in understanding why Amazon's stock has fallen as much as it has. That decrease is justified. It's, in my opinion, not a opportunity to buy the dip. In my opinion, it's a justified decrease in the business's valuation, because the business is in worse shape now than it was before the outbreak, right? It's got a much larger expense base that are long lasting expenses that are going to be difficult to remove and reduce. So this is going to be a challenging journey over the next several quarters for Amazon to get itself out of. In any case, that's all I've got for this video. I truly appreciate you joining me and tuning in. I hope to see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.